And hello everyone to another YouTube live here. We're going to be covering the cryptocurrency market. We have a lot to cover. There's lots that has happened since our last video. Like always, we're going to start off with Bitcoin on the larger time frames and then zoom into the different alts. Looking at the larger time frames, zooming into the smaller ones. So first things first, we are going to look at BTC. Been seeing a lot of aggressive moves to the downside, but let's first look at the weekly here that we currently see within the market. So this ascending trend line is something that we drew somewhat recently when we initially broke the $7,800 zone. We got that another validation of that level of support, and we can see we got our initial anchor point right here, and we pushed basically all the way up to the upside here, and now we have broken it. We have really just completely no real pullback, nothing, broken it without any real significant validation of that zone other than the candle closure. So at this point, to me, that doesn't really serve me anymore, because if it inevitably does move to the upside, well, then I know that there's going to be a resistance zone there anyways. So we're going to get rid of that, and we are going to be looking at a potential zone here, a descending zone. But the main thing that we're going to be looking at is going to be the key level of horizontal levels of supply. Our first one is going to be around $5,800. Second one is the previous ceiling, the previous resistance of this consolidation. That's around $4,200-ish, $4,300. And then the final one, if we get to that, is going to be around $3,200. But we will see if the price does get to that area. We were thinking that obviously the $7,800 zone was potentially going to hold when we were above that area. But since that actually breaking, I'm not going to try to create any sort of bias of a certain support going to hold for certain. Like, I wasn't certain here, but we're going to have the bias for shorts until we see a consolidation like this. Because in my personal opinion, we will not, well, we can, but usually there's going to be some sort of market movement from a down move to a consolidation to then a move to the upside. So we're going to be looking for shorts until we start seeing this phase in the market, where we start seeing consolidation like we can see right here. We saw a move to the downside, which was very aggressive, push the price down, not as far as what we've seen here, because this was pretty crazy, but we did see a push to the downside like we can see, and then we got a consolidation where the price was failing to make lower highs. Now we did make higher lows, so this was an ascending triangle, as we can see. Obviously that's not a perfect ascending trend line, but we have higher lows and a horizontal level of resistance, creating an ascending triangle, push to the upside, and then that kind of commenced our bull run of 2019. So in terms of where we could potentially go from here to the downside, obviously no one knows. I can't give you an exact price area and says this is exactly where we're going to be dropping. We have to look at market structure. We have, like, for me, I would rather see the confirmation from going from a downtrend to a consolidation to an uptrend, and I don't mind catching when it starts the uptrend. I don't need to catch the very bottom of that wick of that low. In my opinion, that is somewhat gambling. But once you see confirmations, you see, okay, perfect, it was in a consolidation, it formed a higher high, and then now formed a higher low. Okay, well, market structure, just looking at market structure, we see, okay, well, that is indicating now we're going to move to a potential move to the upside. Higher high right here, the higher low could not even come back down to the previous resistance, really signifying that the bulls were antsy, they were wanting to get in, they were just really wanting to get in without real any pullback needed to validate the previous level of resistance. And we inevitably did get that retest, like we can see here. We did get a retest of the previous resistance, confirming as a new support. I think we will try to draw a potential descending zone for another level of support, but just to go over this, first off, market structure, right? Higher, high, higher, low. That's what we're looking for. Also, price action. We broke a horizontal zone. You could also draw a descending zone somewhere around here or somewhere around here. So you could draw a symmetrical triangle. That is price action confirmation number 2. And then number 3, you're looking at volume. We see increasing, or you see significant buy volume coming into the market. And then when you do get that push to the upside, what do you see? You see more buy volume on the upside than you do sell volume on the downside. Yes, this candle here was a no demand candle. There should have been more demand to try to push the price up, but we didn't get that. The next candle did push the price and hold it above our previous zone, and then the candle after really confirmed, giving us a solid push to the upside. So it's a little bit of hesitancy in terms of the volume within this zone right here, but we are looking at different exchanges, not just a single exchange for our VSA and or for our volume spread analysis. I was going to say VSA analysis, but then I would be saying analysis twice. So let's now look at potential descending zones that we could be looking at here, because we could be looking at kind of like a widening zone, as we can see right here. I was kind of looking at something around the lines of that, where I was looking for a descending support zone that is currently holding the price, making lower lows, but it's still a support zone, and I think that's going to be the zone that we can see right there. So we did initially draw one that was like so, and it was kind of like here, and it was a confluent zone within this level of support and then this descending zone, but obviously we did not see any real support hold there. So we're just looking for potential areas where the price could hold, right? So we're not going to put it on there and marry the trend line and say we are 100% going to have this here, and this trend line is our holy Bible. We will follow exactly what this trend line is signaling. We can't do that. We got to be dynamic. We got to be flexible. We got to have the ability to somewhat shift our trade plan in a way that fits the current market structure that you see, not what you want to see or not what you're trying to see, is what you actually see, what it's actually showing you is the goal for every trader, is not having too much of a bias and just having a good understanding of what the price action is showing without any real take on your own, just taking the information without any unbias. So in that said, going to look for a potential opportunity here. This is the weekly. We will draw this on the daily as well, looking at the different exchanges, seeing this descending trend line potentially come with a confluence zone, because we do see back in the previous time frames that zone we did talk about initially is a pretty important level of both support and resistance, as we can see right around here. It is a mid-range zone, so it's a minor level of sensitivity. We can see initially it was a zone of resistance back in August of 2017, and then we didn't really hit that zone. We did test for a support back in October of 2017 in that same year, and then we didn't really test that zone really until April of 2019. We did blow right past it back in November of 2018, as we can see, but we didn't really get any real interaction of that zone until we made our way back up, breaking the key level around 4,100, and then we tested that twice, seeing 2 injections of buy volume before our next major leg up, breaking the 8K, 9K zone, around 9K zone where it hit. So in terms of validity, we do see that this is a good zone horizontally, and then also we will look at the smaller time frames. Well, not really small, but the daily time frames, maybe the 4-hour, we will plot this in as well, and we'll see how the price is reacting to this zone. It was obviously a massive, massive dump. At this point, I think you just gotta be patient and kind of let the market give you a price action pattern or some pattern that is a little bit more dependable than what we're currently seeing, because right now we're seeing massive swings to the upside and downside right now, huge swings in volatility, which is great. Like using a small time frame, cutting your losses quickly, being able to catch that start of an early trend is phenomenal, and that is what we're looking for when we are day trading. So it can 100% be done, but it is challenging because the emotional swings are going to be far greater in times where there's a lot of fear, as we can see right here, and also when there's a lot of greed. Back in the later fall and winter of 2017, there was a tremendous amount of greed. There was an immense amount of buy pressure in a lot of vaults, and there was just a buying frenzy, and it was crazy. So in that sense, it was distorted, but in the opposite way to what it's currently right now, where it was distorted to the upside, and now it's pretty distorted to the downside, in my opinion, where we've made a significant lower low, where we had the previous low of 77, and then we dropped down to 66, 65, and then now, we had a wick down on some exchanges sub 4K. On this one, we can see it was at 38.50, where the low was, which is unbelievable. I did not expect the prices to hit this low, but we will see how the price reacts. It does look like it's somewhat consolidating now. I want to say we got climactic volume, but the previous candle seemed like there was a lot of volume as well. So there's some ultra high volume that we are currently seeing in terms of the relative volume. So a lot of transactions taking place. So enough kind of the weekly. We have a potential descending support that is in confluence with our horizontal zone. We will plot this on our multiple daily charts that we do use. So let's now go ahead and plot those in our charts. This was that zone that we initially talked about as well. This is the CME Futures Exchange. We had the descending zone connect the lower highs, and then we did have a nice confluent zone at the 6K area where we had the first dump to the downside, where we had our horizontal level of support. As we can see, it's very, very well respected all throughout 2018 on the CME Futures Exchange chart, and then we then see it as a potential level of confluence. We did get a candle closure at that zone on the daily, so it was a level of significance, but at the end of the day, the bulls were unable to hold the price there, and we did dump further down. But something to note, looking at the volume, obviously every exchange is going to have different volume, but we can see that there's actually significantly more buy volume on the way up than there is on this massive dump to the downside. So it's not like all the bears are just completely dumping their position like we saw. Wow, there wasn't actually that much volume in this one here. I was expecting more. That was my example here, but I guess we got a lot in here. Let's just look at a different exchange to see. Wow. Yeah, this is a little bit more, but that's definitely a lot of volume that we've had recently. So let's just talk about the CME futures and where we currently are. So looking back at that potential zone that we talked about on the weekly chart, let's just discuss that again. This zone right here. Let's now try to find this zone on the CME futures daily chart. First, identifying the horizontal zone of support, as we can see right here. That double bottom, 1, 2 on the weekly chart, key zone, and then also, that descending zone that is connecting the lower lows. It's probably going to be right around here, like so. So let's define that a little bit more, but we're trying to understand where a potential level of support could be located by finding areas of confluence where the price could be potentially seeing multiple zones of demand come together at a central point. So there's our daily chart. It does look pretty well respected with the horizontal zone and the descending zone. That one did as well, and we're just refining it to see potential levels. We will want to ensure that we are waiting for price action confirmation with at least a double bottom where there's 2, if not 3 or 4 respected levels of a valid support that is creating our floor of the structure. That is what we're looking for. So we'll see how the next couple candles come together here within our potential level of support, which is around 48 to 49, maybe even 47. We'll see how the price action comes together, and also looking at the smaller time frames, we will be able to define this zone a lot more clear. So let's go to a different daily chart to see this at a different angle. I'm just going to get a little bit of a drink here, and then we'll proceed. Alright, so the next daily chart is going to be from the Gemini Exchange. Let's just delete that chart. or that trend line was a potential, didn't come into fruition, not even close. Massive, massive bearish candle. So let's try to draw that same descending zone that we have been drawing for the rest of the charts, as we can see, like so. Pretty well respected throughout all the different charts that we're able to see here. Yeah, it looks pretty overall like a pretty good situation. And then we did draw in that zone as well. What we will do is just draw a zone instead of a single line to really emphasize that we're not looking for a single trend line. We're looking for an area where price is going to be respecting as a level of support. And it looks like we could be seeing the around $4,800 zone be that level of support, which is staggering drop. Obviously, I personally, like I said before, did not expect to see this. That dropping to, 76, 75, even 65, that makes sense. But beyond that, to make a lower low, even beyond the 57, 6K range was, to say the least, surprising. So we'll see how the price reacts to these zones, but we are definitely going to be a little bit cautious. We definitely made some pretty good profits here with the XRP short, hitting all the take profits, so that was fantastic. A really, really simple, clean, easy to understand setup, high dependability, which was great, but we're going to take it a little bit slower here because there's so much volatility, as we can see. So we're not going to go too much more into the chart here. We will just talk about the range that we could be seeing here on the daily before we go into the 4 hour and talk about just the consolidation. We will talk about the potential for just longer term time frames. So right now what I see is a potential consolidation from our current level of support right here to our current level of resistance, which is around $5,800, and then our current level of support, let's just put this here so everyone can see it, and also I can see it as well, is going to be around $5K-ish to $5,800. So there's an $800 channel that is currently potentially going to be forming in between this zone. So I don't exactly know how it's going to form, but right now, from the high of the wick of the daily candle on Gemini to where the current candle closure is, there is around $800 channel that could be forming where we're going to be not able to form a higher high and potentially not forming a lower low. But if we do form a lower low, we do know where the next drop could be. Obvious location, previous level of resistance, very, very well respected at the $4,200 level. And then if we do get a consolidation and another potential ascending trend line, and if we're able to form a break, that next level could be a level of confluence where we have the descending zone right here get held yet again, making a lower low. And then we also have a level of confluence with that horizontal zone. So we'll see how the price goes. If we do get an ascending zone, kind of like that, where we're getting an ascending triangle, an ascending wedge, a bearish flag, something that's holding an ascending zone, and it's getting weaker, and we're seeing less and less buy volume coming into the market, and then we start seeing more sell volume coming into the market. We see more bearish engulfing candles. If the criteria that we have is getting checked off, that will be a pretty phenomenal trade, in my opinion, if we do get a bearish opportunity from this zone like here. That is the potential that we're going to be looking for. Is if we do get a pullback here, testing potentially the 6K zone as a resistance. If it does hold this level as a resistance, we will most likely test the support yet again at the $49-ish level of support, and then we may get that extension to test the previous level of resistance. We've already done it in the past, so there's a high probability that we will in the future to get that double bottom shape. If we are looking for a reversal, that would be probably the minimum we're looking for. Looking at all the not all of them, but the main reversal patterns, you're looking at mainly double bottoms, you're looking at head and shoulders, you're looking at a potential squeeze where you're going from a move to the downside and you're getting some level of squeeze, and then you're getting a move to the upside. there are different ways that prices are going to go from downside or bearish to consolidation to upside, and we do have a handful of patterns that we can use to try to capture this opportunity. But ideally, we're going to look for a consolidation here that we can use to have an edge in the market for, so we can potentially make that move to the upside if the price does actually get there to that range what we're looking for. But we'll see how it goes. It's way too early, in my opinion, to tell. But we've already talked about this as a potential. That is, in my opinion, option number 1. Option number 2 is if we kind of go like this, and then if we hold this level very well as a level of support, something like that. We can see this was an ascending trend line and an ascending triangle. This one could be the same. And then if we break to the upside, like we can see, this one was an ascending triangle, kind of similar to what we saw here. Massive dump to the downside. It was an ascending triangle like we saw here. It did not break to the downside. It broke to the upside. So now our bias is bullish. If it did break to the downside and broke this descending zone, our initial thought would be, okay, let's short at a minimum to the previous low, potentially making a double bottom, and then we would be taking profits at that zone. If it does fail lower, we could see another opportunity at this zone right around here. But for now, that is what we're going to be looking for, is a consolidation zone. On the smaller time frames, we will discuss on the live markets, but this is just more macro, longer term, because we just had a massive dump that just blew through so many supports that I thought we had. If we're looking at this zone right here, we're looking at $7,800 zone. We're looking at the top of this zone, 6K, very key level. Even this zone, we saw the wick pass. Even the 41 zone, 42 zone we passed. Lot of volatility to the downside, a lot of panics, a lot of selling going on. So we will have to keep that in mind. But let's dive into what's happening within the consolidation. But on the long-term time frame, that's kind of the outlook that I currently see within the market. So that's option number 1. Or if we get a more healthy trend to the upside, we could then get a bullish push, kind of like we saw right here. So we'll see how the actual formation of the move or of the pullback actually looks like, because there's a big difference between a dump down versus something that's gonna move up, breaking resistance. There's distinct differences between the two, and we're going to try to understand them while the price action is unraveling in front of our eyes, just as time goes on here. And that's our job as a trader. So right now, we know that this is a level of support, so we're going to go into the 4-hour to discuss a potential opportunity that we do see. I haven't really checked the 4-hour chart too much, but we'll first go to the daily, plot out all our zones, because it is important to understand what's happening on the larger time frames, and then we'll zoom right in and then discuss what we're able to see on the smaller time frames here. So we can see, we'll talk about the monthly actually at the end. Technically it might have been better to do it at the beginning, but that's real macro stuff. But let's go to the 4-hour here, and I'm gonna go back to the daily. Delete this, and then we got our major zones there. I'm going to delete just that one. I'll keep the rest of them, and then from here, wow, so this Bitfinex chart is definitely lower than the rest, seemingly, in terms of where it is current related to where the trend line is. But we'll leave it there. That's where on the daily it is plotted, so we will respect where the trend line has been plotted, because on the daily chart that did look pretty well respected through and through. And if we just zoom out a little bit, yeah, it's not going to be perfect. We could potentially drop it down here. And then I just want to see how this looks momentarily on the daily chart again. Because I dropped the anchor point from here to a little bit further down. I just wanted to see how that looks within the current price action here. So I think I'm going to leave it like that because the previous candle closure was right there. And I'll leave this on the 4-hour chart. So actually pretty well respected at that zone. So we see some pretty key zones also in the daily chart. I will draw in this zone as well because it is a pretty important zone that we do have to keep in mind. Let's just get that width there. So we are below it on Bitfinex, whereas on some other exchanges like Gemini, we are still above that zone. And on the CME futures, we are below that zone, pulling back. So tons of volatility. Like the single 4-hour candle is currently on the daily, or sorry, is 30%. Holy shit. That is crazy. So yeah, be safe out there, everyone. Now to go to the 1 hour, there's not really too much to discuss within these two candles here. We do see that there's massive rejection where there's an immense amount of buy pressure around these zones, which makes sense. It's a massive steal. It dropped some crazy amount, I don't know exactly, but from high to low, it dropped a significant amount. So for the people who are interested in purchasing, obviously it's a great time to be buying, hence the amount of buy pressure here. But at the end of the day, the momentum, the trend, and the overall fear in the market is still strong. So we do have to keep that in mind. We're not randomly going to be looking for longs. I do have to say that this is a great time to be dollar cost averaging, in my opinion, at these prices. In 2019, we hit 14K relatively quickly from the consolidation that we were in basically at the start of 2019. Prices can go up pretty quickly, so dollar cost averaging at these lows is definitely not a bad idea in my personal opinion. This is not financial advice, but it's just my personal opinion from one person who is very active in the markets, who trades on a daily basis. I just personally think that dollar cost averaging, while the price is significantly reduced, is not a bad way to go if you are looking to gain more exposure and gain more sats kind of within your wallet or wherever you keep your BTC. So last thing we're going to go off and do is the smaller time frames. I think on the hour there's not a whole lot to discuss. The 15-minute will give you a little bit more clarity as to, I think, how the price is looking, in my personal opinion. So the first thing I notice on the 15-minute chart is going to be this descending trend line that the price is currently holding. Also, what I notice on that same note is a potential reverse head and shoulders. Are you able to see it? Maybe not. I will draw it in for you just in case. It's right here. So this is the potential left shoulder. Not really of a zone there. So, we'll see how it goes in terms of if it breaks this zone, because my initial thought, if it does break this zone, would be an actual situation like this, where you get a pullback all the way to this zone, and then you might get that last push off, something around the lines of that. But where the current price is, might not be the best situation, but in terms of reversals, that is a potential where you would get rid of the two white lines here and you'd put a potential breakout zone maybe at the $6,200 zone. We don't exactly know. And then you got your connection of the shoulders at around 56. Obviously, we'll see exactly how it goes, but that is a potential reversal pattern. And just currently talking about a descending trend line right now, we do see a descending trend line with the anchor point at 67.55 with 1, 2, and then 3 touches. So it's 4 touches in total, holding the price pretty well within a descending zone. So we're currently making lower highs, as we can see, anchor point, and then we see 1, 2, 3, 4. You can count that as one zone right there. So in total, we can still say we still got 4 zones, making it a dependable area. that we can see right now as well. $44 to $4,200 is our current level of support. So that means that we are going to be squeezing within this zone where we have a level of support that's probably going to be holding, and the price is going to be squeezing closer to the apex, which is right here. The price has to make a decision. It's either going to go to the upside or downside. If it does go to the downside, we will be looking for that lower high formation. Remember, this is a high, lower high, lower high. We're looking for that lower high. This is the push. We're looking for the completion of the pullback, the completion of the exhaustion before we look to enter short. That is our goal in order to try to reduce risk and try to increase the risk reward for each trade that we're taking. So basically going to keep it very short and simple and have a 2-option scenario here. Option number 1, we continue, drop, make a lower low compared to the lows that we could be making here, and then a lower high where then we have a zone of confluence with the descending zone creating a resistance, and we have a horizontal zone creating a resistance. That is option number 1. We'd be looking to short, gain exposure to the short side, and then we'd be looking for more short side exposure. Option, we need to make a very significant lower low. We could see an ascending trend line there. That would be, for me, a confirmation if we break that zone like so. If we see an ascending trend line and then we kind of form this zone like that, that would be a good entry right around there. But some formation similar to an ascending zone, a descending triangle formation, something along the lines of that. That is option number 1 for a short. For a long is we're able to hold this level of support here. We might see wicks, but overall we are still able to hold this zone. I don't really care if we're seeing higher lows or holding a horizontal level of support. But we're able to hold the zone, and then at this point right here, we have an exact criteria what we're looking for at that point. For people who've been following us for a while, they know what it is. For those who don't, this is our criteria. We have a 3-pillar approach for approaching breakouts. Really, any which way direction, up or down, does not matter. Number 1, we're looking for price action, which is going to be the descending triangle or descending trend line. We want that to break, number 1. That is going to be the first thing. Number 2 is going to be market structure from a consolidation, because right now we're going to be in a consolidation. We want to see the market structure break the consolidation and form a higher high, and then we want to see that higher low get validated, which is probably going to be above the previous level of resistance, new level of support. That is number 2. Number 3 is looking at the volume, the VSA. That is going to give us a relationship and a comparison of the supply and demand, and we're going to build a story through the 3 pillars we just discussed. So that is going to be our approach for this next upcoming trade that I see within the markets. We see that happening right here. All that stuff that we just talked about, you can see all that right here. Yes, it is less respected of a zone, but we can see ascending zone. What did we get? We saw bouncing, we saw a squeeze, we saw a significant lower low. What did we get after that? We saw a lower high. We didn't get really an ascending zone connected there, but that ascending trend line with the lower low, lower high formation, what do we get in the volume? We saw significant sell pressure on the downside, not too much buy pressure on the way back up. Now, what we would ideally like to see in this situation is actually decreasing volume when we're making our way back up. So if this is the move down and this is the pullback to retest this support here, we're looking for reduced buy volume, showing that there is less and less demand coming into the market, and it's going to come back down because there's just not as much demand. It's just short sellers taking profits. It's not really true demand coming in. We're going to look for that. So that's a great example that we see here. Other than the VSA, that wasn't really perfect because we see increasing buy volume. If we saw decreasing buy volume, that would be the most ideal situation. But that is, in my opinion, a good thing we're going to be looking for a short opportunity. Like we said, we're going to be looking for something like this. lower high, lower high. We're looking to enter on that lower high after breaking a level of support. Structure number one, right? I know I'm going through this multiple times, but I think a lot of people don't really understand market structure as well as they need to actually trade. So I'm going over it multiple times on the 15-minute on the smaller time frame. So it's actionable. It's something that people can see happen in front of their eyes within the next, 4 hours to 2 hours. We'll see how it goes, but maybe a little bit longer. I don't know how long it's going to be, but that's basically it. I don't really have too much to go off on BTC. And as for the different alts we have in the market, I think at this point, it, to me, makes sense to be looking more at Bitcoin, because when we did see BTC move up, then we did see the alts move up, but beforehand, we're not really seeing alts front run BTC when we're seeing this much fear and panic and uncertainty within the markets, in my opinion. Bitcoin is the market leader. Bitcoin is going to be the number one asset that people go to in the cryptocurrency market if they want to invest in the cryptocurrency market, in my opinion. It is the number one most well-known asset, the most established, long-lasting asset that we've seen in the virtual currency, in the cryptocurrency space. So if someone's going to invest in anything in crypto, that's going to be the place where they're investing. So if you're going to look for a trade, why not look at the asset that is, in my opinion, going to be the front runner, going to be the leader, going to be the initiator, kind of for the market momentum. To me, in times of fear, uncertainty, mass volatility, major fear, I kind of tend to shift more towards Bitcoin. And then when things become more speculative, when things become more greedy, when there's more buy pressure, when there's more speculation and the bulls are very confident within the market, then I will slowly shift my focus to the alts, because they are going to give me a much higher ROI in terms of the potential explosion of buy volume that they could see. Now, mind you, Bitcoin can do very similar in terms of the price appreciation, but for example, let's say if Bitcoin is looking pretty good, but the long opportunity is not ideally favorable, because let's say, for example, instead of four validations of a level of a descending trend line, we're only getting 2 or 3. And then I see an alt that looks similar, but we just have that extra little validation that is going to give me a little bit more confidence to put on that trade. And because BTC is going to kind of lead the market and alts will follow, you're going to be looking at BTC very, very often for somewhat of your directional bias. So that's how you navigate the markets in these times, in my personal opinion. BTC is going to be the number one asset that you should be looking at when it's times of mass blood on the streets at these points, because there is volatility and you could short these alts. 100% that makes sense, but it's just that's the way I like to look at it. If you look at Link, it's a little bit scary here. We already talked about it, but like, if you market ordered at just the wrong time, you lost your entire account, everything. And that's just unlucky. That's just pure unluckiness. But, it happens. And I just don't think that you'll get this level of volatility in BTC because it's just so much more established. This took out every single bid within the entire Binance market. In Link trades 20 million. I don't exactly know how many million it trades in a day. So, someone sold so much Link that they took out every single bid. Very, very significant move. Just don't see that every single day. It blows my mind. But, if this doesn't get your eyebrows up if you are a trader, I don't know what will. Because this is some crazy, crazy stuff that we're seeing here within the markets. So, not much to talk about this. I wanted this to be a little bit quicker. Because we will obviously do one tomorrow. But I just wanted to kind of lay out the structure that we are going to be looking for within this nice consolidation on the 15-minute chart for BTC. Mainly at this point in time, we will be mainly just covering Bitcoin as well as Ethereum. Ethereum is a very important coin as well. It just went out. It went to $86. Like, that's nuts. Look at the high. Look at what it went to before. Went to $1,500, $1,450, and now it's sub $100. That is crazy. So yeah, that's the low right there of 2018, 2019. You know, that's crazy. It was, yeah. I'm kind of in awe, to be completely honest. But you know, at these prices, these entries for longs are gonna be filthy, man. Like, but the thing is, you gotta get them, you know, but B, you gotta be able to handle this volatility, because they might be great opportunities here, but they're only great opportunities if they're gonna continue to go up. So we don't want to jump on them too quickly. So I think that's the end of it for this video. I just wanted to talk about BTC. We will go over all the different alts in tomorrow's crypto market update. But that is the end for today. Thank you very much for watching, everyone within the YouTube. If you have any questions, drop a comment and we'll be sure to answer it if it's relevant to this video. We hope you got something educational, informational, knowledgeable, something valuable within this YouTube live. That is why we do it. And it'd be an interesting end of week, and then also it will be an interesting next week as well. There's a lot of movement in not just the crypto market, but in a lot of different asset classes. Look at commodities, look at oil, obviously, massive drop. The biggest drop it's seen in decades, in many, many years. S&P, obvious massive meltdown that we're currently having. And then also even in terms of just gold, like there's, yes, a lot of volatility in gold, not so much if you look at it in terms of percentage, but you know what quote unquote normal movement is. This is relatively higher than what we're normally seeing. So you know, it is a little bit nice seeing that gold is moving down the same day Bitcoin is. So it's not like we're seeing the true safe haven asset that has stood the test of time remain completely stationary, you know, not dropping while BTC is taking a nosedive. That wouldn't be very good for the rep of BTC being a possible safe haven asset. But we do see both gold and BTC take a nosedive as well, which makes that kind of relationship a little bit more not believable, but a little bit more noticeable, I guess you could say. I guess believable, because we are just building a relationship through experience in a sense. Because I try to look at the relationship between BTC and gold quite a bit, and as we can see, you know, 2020 has been favorable for both markets basically, and 2019 as well. Very, very good year for both markets. So we'll see how it goes. We're at a key level of support on gold, so it's just something to keep in mind. The 1550 range is a key level of support for gold, which could mean that we could get some consolidation. We got a massive aggressive move to the downside for gold, so we're going to have some level of consolidation, which does go in line with our overall structure with what we're looking for BTC, so it makes sense. But overall, I think we're going to stay a little bit patient because we got a massive volatility move that happened recently. So, you know, we'll go to bed, we'll wake up, we'll see what the market's doing, we'll see how the 15 minutes looking, we'll see if it's at the apex. We'll just assess the situation. But this, I thought, was going to be a little bit quicker. Turned out to be around 43 minutes, but that's okay. Yeah, not much more to talk about. Thank you very much for watching, and I'm just going to cut it off there. So have a good one, everyone.